Earlier this month, Turkish President Recep Tayyip Erdogan announced the launch of a new medium-term program with key goals and objectives set for the next 3 years. Core pillars include economic growth and trade, increasing employment, expanding Turkiye's investment environment, and price stability. When the president visited the United States to attend the 78th UN General Assembly, he and his delegates were also engaged in high-level business meetings on the sidelines, including attending an investment conference co-hosted by Goldman Sachs and the Turkiye-US Business Council.
There were nearly 200 registered interested investors. Of course, most of them, about 150, were American investors. During our meetings with Goldman Sachs, while coming to America, I saw that there was really great interest in Turkiye and that the medium-term program was awaited with interest by American investors.
Turkiye's trade volume with the US exceeded $32 billion last year, with Turkiye making almost $17 billion in exports to the US. The total trade volume was up by over $4 billion from 2021. At the gathering, President Erdogan emphasized Turkiye's economic growth.
We recorded a growth rate of 3.8% in the second quarter, thus achieving the second highest growth rate among OECD members and the third among G7 countries. In exports, we achieved $165 billion in the first 8 months of the year, and $253 billion on an annual basis.
The Minister of Finance says he sees meetings with leaders and fund managers as an opportunity to showcase Turkiye's growth outlook and expects it to help contribute to the flow of funds into the country. President Erdogan also met with Elon Musk. The president called for Musk to build his 7th Tesla factory in Turkiye and urged further cooperation with Musk's SpaceX program. President Erdogan also attended a meeting with President of Alibaba, Michael Evans, and Trendyol's Çağlayan Çetin, where the two firms agreed to a $2 billion investment plan. As Turkey sets its sights on the medium-term program, these meetings signal the country's willingness to achieve its economic goals and objectives in the years to come. Emre Boz, TRT World.
For more on this, we are joined by Taha Meli Arvas in New York. He is an adjunct professor of finance at Boğaziçi University. Professor, thank you for joining us today. Right, all of this is going to have a positive impact on inflation here in Turkey. What's your outlook on inflation in this country in the short term as opposed to the longer term?
Sure. In the short term, I think we're going to have persistent inflation globally. And Turkey doesn't operate in a vacuum, as nor does any other country, as you know. Commodity prices are priced in dollars, as we know. So that means most energy, including oil and gas, are priced in dollars. And we see that the Federal Reserve recently has explained that it really has not won the battle against inflation. Neither has the EU, and neither have all these other major countries that are dealing with major inflationary pressures. So to say that inflation will disappear from Turkey tomorrow would be a mistake. Mm-hmm. Will it slowly decrease? That's the projection globally. So Turkey is no different. Obviously, Turkey has taken proactive steps to speed up that process so as to increase the slowing of inflation as soon as possible. Mm-hmm. And we may see fruitful responses from the economy soon.
Right, and that's an ambitious target. At the same time, that's a positive sign, as you say, especially in the medium to long term. But at the same time, this hike may have another sort of impact on those growth figures that we've seen, because we know that the higher government spending at the beginning of this year, after the twin earthquakes here in Turkey, has actually been supporting those GDP figures. But after this hike, then the picture may change slightly. What's your view on that, on the growth?
Well, sure. There are two factors here at play. One of them is this demand for Turkish goods, for Turkish services. We're seeing the world move away from other major export countries like China. Turkey has benefited a lot from the post-pandemic reassignment, if you will, of production for a lot of things. We have this new government has a lot of proactive measures in the field of science and technology, a lot of in industry and technology, a lot of investments there. So that's a positive. But on the other side, we have these increased interest rates, which are making it more difficult for companies to finance their investments, which is frankly the goal. I mean, increasing interest rates by central banks is meant to slow economies. When economies are when they're operating at white hot levels, you need to slow them down. So this, I think, but obviously you don't want to slow them down too much. It's a delicate balance here. So I think the central bank is trying to do its best to both slow down the economy, whereas at the same time not stop it completely.
And that's correct what you say. Let's take a look at those export numbers that you were talking about. They hit record high in August. They shot up 8% in July as well. What is this telling us at a time when actually European productivity is going down? That's a positive sign, but at the same time, the current account balance is still in the red here in Turkey. What do you make of all that?
Right. I mean, Turkey's current account balance is in the red because of energy. Turkey is a net energy importer. It's taking very interesting measures to shore up energy production in the country, which will soon lead to hopefully this energy net importing to decrease, and hopefully ultimately to be a net exporter of energy. With that, we'll have a current account surplus, which will lead to a stronger currency and will help all across the board as far as financial environment appears. So all these are very important things. But if you're a country that net imports energy and it's to the tune of billions, if tens of billions of dollars every year, then you're going to have a net deficit. And the only way to overcome that is either increase exports quickly, which Turkey is trying to do, or produce more energy locally, which Turkey is also simultaneously trying to do. So if they can do both of these things at the same time, then it'll help financial markets and the economy in general much better.